Hello, and welcome back to Boni's Life, your weekly dose of crypto clarity. I'm Boni, and this week we're diving headfirst into the digital deep end. We'll be dissecting the market's every move, from the technical twitches of Bitcoin and Ethereum to the global economic tremors that could send ripples through your portfolio. We've got a packed show for you today. We'll start with a technical deep dive into last week's roller coaster ride. Then we'll pull out our crystal ball, or, our economic calendar, to see what the coming week has in store. We'll also be tuning into the chatter from the big players, the institutions, the regulators, and the so-called experts to see where the smart money is flowing. And of course, we'll wrap it all up with some actionable trading strategies to help you navigate the exciting and sometimes terrifying world of crypto. So grab your coffee, settle in, and let's make some sense of the beautiful madness that is the crypto market. All right, let's get our hands dirty with some charts. Looking back at the past week, the crypto market has been keeping us on our toes. Bitcoin, our beloved digital gold, has been on a bit of a tear, posting its best September performance in history. It's currently trading around the $115,865 mark, showing a modest weekly gain of about 0.36%. Now, that might not sound like much, but in the world of crypto, stability is the new sexy. We've seen a 7-day high of nearly $118,000 and a low of around $114,500, with a volatility of about 2.16%. The technical indicators are painting an interesting picture for Bitcoin. We're seeing strong support holding around the $114,500 level, which has been tested multiple times this week without breaking. This level is crucial because it represents the convergence of several technical factors: the 20-day moving average, previous resistance turned support, and significant volume accumulation. On the upside, we're looking at resistance around $117,900, which coincides with the recent weekly high. Now let me give you the specific trigger points you need to watch for Bitcoin this week. First trigger point: if Bitcoin breaks above $118,000 with volume confirmation, we're looking at a potential move to $121,500 as the first target, with the ultimate target at $128,000. The stop loss for this bullish scenario would be at $116,500. Second trigger point: if Bitcoin breaks below $114,500, we could see a retest of $112,000, with a potential drop to $109,500 if selling pressure intensifies. The stop loss for short positions would be at $115,500. Now, let's talk about Ethereum. Our favorite smart contract platform is currently hovering around $4,480. The technicals for ETH are painting an interesting picture. We have a strong buy signal from the moving averages, with 12 out of 15 indicators screaming buy. However, the oscillators are in neutral territory, with the RSI sitting at 52.1. For Ethereum, here are your key trigger points for the week. Bullish trigger: a break above $4,560 with sustained volume could propel ETH to $4,800 initially, with a stretch target of $5,200. Your stop loss for long positions should be at $4,300. Bearish trigger: a break below $4,420 could lead to a retest of $4,100, with a potential drop to $3,900 if the broader market turns sour. Stop loss for short positions would be at $4,500. Now, let's dive into what I call the crypto calendar of destiny. The next 7 days that could make or break your portfolio. This week is absolutely loaded with events that could send shockwaves through the crypto market, so pay attention. Monday, September 22nd is going to be a monster day. We have 38 economic events, but here's what matters for crypto. The US National Activity Index drops at 12:30 p.m. UTC. This is crucial because it measures overall economic activity and directly impacts risk appetite. If it comes in strong, expect crypto to rally. If it disappoints, we could see a flight to safety. Also watch the EU Consumer Confidence Flash at 2 p.m. UTC. European sentiment has been driving institutional flows lately, and a surprise here could move markets. On the crypto-specific front, we have the Optimism token unlock happening. 24 million OP tokens worth approximately $48 million hitting the market. This could create selling pressure on OP and potentially impact the broader Layer 2 narrative. Tuesday, September 23rd, brings us 39 economic events, but the crypto world will be focused on the Korea Blockchain Week starting in Seoul. This is one of the biggest crypto conferences of the year, and historically we see increased volatility and announcement-driven price action during major conferences. Expect potential partnership announcements, new product launches, and regulatory updates from Asian markets. Also watch for any Bitcoin ETF flow data from BlackRock and Fidelity. Tuesday typically sees the release of Monday's flow data. Wednesday, September 24th, is the peak of economic activity with 48 events. The big one for crypto is the potential Federal Reserve speakers throughout the day. Any hawkish comments about future rate hikes could pressure risk assets, including crypto. On the positive side, we're expecting major DeFi protocol updates, with several projects scheduled to announce governance proposals that could impact token prices. Uniswap has hinted at a major announcement this week, and historically, DEX-related news has broad implications for the DeFi sector. Thursday, September 25th, brings 57 economic events, the busiest day of the week. The crypto community will be watching for any updates from the SEC regarding the pending Ethereum ETF applications. While not confirmed, industry insiders suggest we might get clarity on additional ETF approvals. Also, several major mining companies report quarterly earnings this week, and their guidance could impact Bitcoin's hash rate projections and overall network security metrics. Friday, September 26th, has 37 economic events, but its options expiry day for Bitcoin and Ethereum. We have approximately $2.1 billion in Bitcoin options and $800 million in Ethereum options expiring. The max pain levels are at $116,000 for Bitcoin and $4,400 for Ethereum. This often creates gravitational pull toward these levels as we approach expiry. Saturday and Sunday might seem quiet on the traditional economic front, but the crypto market never sleeps. Weekend trading often sees lower liquidity, which can amplify price movements. We're also expecting potential announcements from major crypto exchanges regarding new product launches, as they often time these for weekends when traditional markets are closed. Now, let's talk about the regulatory landscape, because this week could be a game changer. The SEC and CFTC have announced a coordinated approach to digital asset regulation. They're talking about harmonizing rules, streamlining reporting, and exploring innovation exemptions for DEFI. On September 4th, the SEC announced its spring 2025 regulatory agenda, introducing potential rule proposals focused on supporting innovation and investor protection. This represents a massive shift from previous regulatory uncertainty. The institutional money continues pouring in at unprecedented levels. Ethereum ETFs are actually outpacing Bitcoin in short-term inflows, with $2.8 billion in weekly net inflows compared to Bitcoin's $562 million. BlackRock's Ether ETF alone contributed $363 million in a single day. This tells us that institutions are not just buying Bitcoin as digital gold, they're embracing Ethereum's utility and yield potential. Here's something fascinating. 72% of Bitcoin is now illiquid as exchange reserves decline. This supply squeeze, combined with institutional demand, creates a perfect storm for upward price pressure. Corporate adoption continues accelerating, with more companies following MicroStrategy's playbook of adding Bitcoin to their balance sheets. The altcoin season narrative is gaining momentum. Bitcoin dominance has dropped to 64%, and we're seeing increased trading volumes across alternative cryptocurrencies. Layer 2 solutions are handling 63% of Ethereum transactions, reducing gas fees and improving scalability. Stablecoin adoption now accounts for 13.2% of the total crypto market cap, facilitating seamless liquidity. Now, let's get to the meat and potatoes, your trading strategies for the week ahead. I'm going to give you 3 distinct scenarios with specific entry and exit points. Scenario 1, the bullish breakout. If Bitcoin breaks above $118,000 with volume exceeding $30 billion in daily trading, here's your play. Enter long positions at $118,200, with your first target at $121,500 and your moonshot target at $128,000. Your stop loss sits at $116,500, giving you a risk-reward ratio of approximately 1 to 3. For Ethereum, if it breaks $4,560 with volume above $8 billion, enter at $4,580, target $4,800 initially, then $5,200. Stop loss at $4,300. Scenario 2, the range-bound grind. If we stay within current ranges, you can play the bound strategy. For Bitcoin, buy near $115,000 support and sell near $117,500 resistance. This gives you a $2,500 range to work with. For Ethereum, buy near $4,420 and sell near $4,540. Use tight stops, 1% below your entry for long positions, 1% above for short positions. Scenario 3, the bearish breakdown. If Bitcoin breaks below $114,500 with high volume, this could signal a deeper correction. Short at $114,300. Target $112,000 first, then $109,500. Stop loss at $115,500. For Ethereum, a break below $4,420 could target $4,100, then $3,900. Short at $4,400 with a stop at $4,500. Risk management is absolutely crucial. Never risk more than 2% of your portfolio on any single trade. Use position sizing calculators to determine your exact trade size based on your stop-loss distance. In the current low volatility environment, consider using wider stops to avoid getting whipsawed by normal market noise. For those interested in yield generation, Ethereum staking continues to offer attractive returns with rates projected to exceed 50% of circulating supply by year-end. Several DeFi protocols are offering competitive yields, but remember that smart contract risks and impermanent loss can erode returns. The Federal Reserve's recent rate cuts have created a favorable environment for risk assets. Lower interest rates reduce the opportunity cost of holding non-yielding assets like Bitcoin and drive investors toward higher risk, higher reward investments. This monetary policy backdrop should continue supporting crypto prices. However, we must remain vigilant about potential policy reversals or unexpected economic developments. The global economic environment remains uncertain, with geopolitical tensions that could impact market sentiment. Diversification remains crucial even within crypto portfolios. Looking at network fundamentals, Bitcoin's Lightning Network now supports 8.2 million users, expanding its utility beyond store of value. Ethereum's continued development, including ongoing scalability improvements, reinforces its position as the leading smart contract platform. The technological developments continue driving long-term value creation. We're seeing increased adoption of Layer 2 solutions, growing institutional custody solutions, and expanding use cases for both Bitcoin and Ethereum. These fundamental improvements support the long-term bullish thesis, even during short-term volatility. So there you have it, folks. We've got a week packed with potential catalysts, clear technical trigger points, and multiple trading scenarios to navigate whatever the market throws at us. The convergence of improving regulatory clarity, increasing institutional adoption, and strong network fundamentals creates a compelling backdrop for the crypto market. Keep your eyes on those trigger points I mentioned, watch the economic calendar like a hawk, and remember that in crypto, fortune favors the prepared. Whether we see the bullish breakout, the range-bound grind, or the bearish breakdown, you now have the roadmap to navigate each scenario. That's all for this episode of Boni's Life. If you found this analysis helpful, smash that like button, subscribe to the channel, and ring that notification bell so you never miss an update. Drop your thoughts in the comments. Which scenario do you think we'll see play out this week? What trades are you eyeing? Let's start a conversation. Until next time, stay curious, stay informed, and stay profitable. This is Boni, signing off.